Hi guys, welcome back to High Yield Intraday Trading. So today we are going to discuss about a simple moving average that is being respected by almost all the stocks. Okay, and that simple moving average is the 200 simple moving average. Now this moving average is considered to be the strongest amongst all the moving averages. So the funda still remains the same about going long or going short. But before we move on to that, let me give you a small explanation of what exactly a moving average is. Okay, now the moving average is something that smoothens the price action of a stock by taking the mean or average price movement over a given number of periods. Now in this case, the period we are talking about is for 200 days. Okay, so the moving average simply calculates its value based on the closing price. Okay, now we also have other methods of doing this, like using the tick chart or highs and lows of a candlestick, but let's not be concerned about that right now. Coming back to the 200 simple moving average, now the reason why this is the most important thing to have an eye while trading is because of the simple fact that all the traders are actively watching this average on the price charts, especially the big shots. Okay, now when I say the big shots, they are the ones who can move the market. Okay, so since we have so many guys having their eye on the 200 SMA, it's obvious that many traders will place their orders around this particular key level. Okay, so basically 200 SMA works as a strong resistance as well as it works as a strong support. Okay, now coming to how do we trade the 200 moving average, there are two parts of it. Okay, one is the buying signal, the other one is the selling signal. Let me cover one after the other. Okay, now coming to the buying signal. Now buying signal has two parts of it. One is the bullish breakout, the second is the support bounce. Now coming to the bullish breakout, when the price action breaks the 200 SMA from downwards, it gives a strong long signal. Okay, this is called the bullish breakout. Now what is the support bounce? When the price action meets the 200 SMA as a support and bounces upwards, it creates a strong buy signal. That is the support bounce. Okay, now coming to the second part, that is the selling signal. Now again, selling signal has two parts of it. One is the bearish breakout and the other is the resistance bounce. Now what is a bearish breakout? When the price action breaks the 200 SMA from upwards, it creates a strong short signal. This is called as the selling signal. Okay, now coming to the resistance bounce, when the price action meets the 200 SMA as a resistance and bounces downwards, it gives a very strong short signal. This is called as the resistance bounce. Okay, now one more important thing to note here is make sure that you use the volume indicator to trade the 200 SMA, because volumes are very crucial when trading. Okay, because if the volume is high, then the stock is very likely to be more volatile and more certain in its breakout. Okay, but if the volume is low, then it's more likely for a pullback. Okay, now just remember one point, guys. I always state this, that volume is the king. Now me being an intraday trader, mostly I take tremendous advantage of volume in my trades. Okay, that's because I just love volatility, and volatility comes in when the volume is high. Okay, it's as simple as it is. Okay, so let me take you to the charts to make it more clearer. Note that I will be explaining the 200 simple moving average with respect to positional trading as well as intraday trading. So let me cover the positional trading first. Okay, so taking you to the charts here. All right. I have taken randomly, I have taken the scripts very randomly. So let me take Hindalco and let me maximize it. Okay, now first thing first, how do we plot the 200 SMA? You go to studies, you go to moving average, replace this number with 200. The field will be closed, the type will be simple, the offset will be 0. You can choose your color according to your preference and you click on done. Okay, this gives us the 200 simple moving average here, a one-liner. Okay, now coming to Hindalco, I will show you the latest breakthrough. Okay, because if I cover it as a history, it will take a long time. Okay, so I will just show you the recent things that happened in Hindalco. Okay, so this is the present date, and if we go back, this is the place where the candlesticks actually crossed the 200 SMA. Okay, now according to what we have discussed earlier, if the candle crosses the 200 SMA from the downward direction, that is a strong buy signal, right? So if I zoom it in, this is the candle. Let me draw it. Go to rectangles. Okay, so this, I'm so sorry. This is the candle which gives us the hint that we can go long because the candle closes above the 200 SMA. Okay, and the stop loss in this case will be the swing low. Okay, in this case, the lower, the low of this candle, okay, is your stop loss. The low of this red candle is your stop loss because it is the recent swing low. Okay, now you go long here at around 87, let's say. Okay, you go long at 87, you get this big red candle after 2 days of going long, but it never hits the stop loss. Okay, so we are safe. Now this whole thing is a 1-day chart. Okay, you can see it here. It's a 1-day candlestick chart, and then you can see the movement from the time you went long. You went long at 87, and in today's date, it is 205. Okay, so the movement was from 87 rupees to 205 rupees. Okay, and the date precisely was 22nd March 2016. Okay, so you see the power of 200 moving average here. Okay, the 200 simple moving average here. Okay, if I take you back a bit, okay, I take you back a bit. This was for going long. Let me see if we have a chance to go short. Okay, we have the chance to go short here. Okay, so this is the red candle which closed below the 200 SMA, and this gives us a hint that we can go short from here. Okay, in this case, the stop loss will be recent swing high, that is the top of this candle. Okay, so this will be your stop loss, that is 176.65. Okay, and then you see the movement right from let's say 154. Right from 154, it fell down to 59. Okay, even if you take this point where the candlestick crosses the 200 moving average, let's say if you exit here, still it is 86 rupees. Okay, so the movement was from 154 to 86 rupees. Okay, so I believe you realize the power of the 200 simple moving average, guys. All right, now let me take you to another example. Let's go to Scott's. Let me maximize it. All right, so let me go to the point where it crossed, where the candlestick closed above the 200 SMA. Okay, this is the point. Okay, so we go long here. It is around 150 rupees. Okay, and the swing low, the recent swing low is here, so 127 will be your stop loss. And then you see the movement right from 150 rupees till date, it is 680 rupees. Okay, and the precise date when anybody would have gone long here is 4th of June 2016. Okay, so from 4th of June 2016 till date, it has moved from 150 rupees to 680 rupees. Okay, now this is the kind of movement we are talking about in positional trading, guys, just with the help of 200 simple moving average. Okay, let me take another example. Let's say Ibriel Estate. All right, so this is an example. Okay, this is a good example actually, because we have some stop loss hitting here. Okay, now the candle crosses here. This is the green candle which you see has crossed the 200 simple moving average, right? This one. Okay, so you go long here, okay, at around 80 rupees. Okay, and the stop loss will be the swing low, the recent swing low, that is 65 rupees, let's say. Okay, so we go long at 81 rupees, and we have the stop loss at 65 rupees, and it gave us a very sideways movement for a lot many number of days here. Okay, but it never actually touched our stop loss. Okay, so we are safe here. Okay, and finally this day came when it started the up movement. Okay, so we had gone long at around 81 rupees. Okay, and today the price of the stock is 225 rupees. Okay, a movement from 81 rupees to 225 rupees. Now this is the kind of movement we are talking about with a 200 simple moving average, guys. Okay, there is obviously a specific reason why this particular simple moving average is considered to be the king among all the other moving averages. Okay, and the reason you can see very well here. Okay, now this covers the positional aspect of it. Please go ahead and backtest this. Go for the previous days, previous years, previous months data, and see how the 200 simple moving average works. Okay, now coming to the intraday. Now in intraday, now when I say 200 simple moving average, that is nothing but the average of the movement of the last 200 days. Okay, now 200 days is a long period, guys. Okay, now if you see, in total we have around 240 or 250 trading days in a year. Okay, so in intraday it has very rare chances that we will see a candlestick which is close to the 200 simple moving average. Okay, but one point to remember is, if at all you see any day a candle which is closing above the 200 simple moving average, do not hesitate to go long over there. It is bound to give you movement in the upside. Similarly, in intraday, if you see a candle closing below 200 moving average, don't hesitate to go short from there. It will surely give you a nice movement on that particular day. Okay, I don't have an example right now because I really don't want to go ahead and search in a 5 minutes time frame. It will take a lot of time. So I would request you all to go ahead and change the time frame from 1 day to 5 minutes and see if you get a movement which is near to 200 simple moving average. Okay, so just to make it more clearer, the bullish breakout, I just want to cover the bullish breakout, the support bounce, the bearish breakout, and the resistance bounce, since I have the graphs open here. So bullish breakout is this one. Okay, or you can consider this one as the bullish breakout. Okay, that is when the candlestick closes above the 200 simple moving average. Okay, this is the bullish breakout. Okay, now support bounce is something, I don't have an example here, but let's say if you have a candle here, okay, it's coming down it's coming down, and it comes to the point where it is about to touch, or it touches the 200 simple moving average and then bounces back in the upward direction. That is known as the support bounce. Okay. Now coming to the bearish breakout. Bearish breakout, we have seen it in Hindalco, I believe. Yeah, this is the bearish breakout, okay, wherein the red candle closed below the 200 SMA and then it went in the down direction all the way. This is the bearish breakout. Similarly, resistance bounce is something, yeah, this is the example, is a good example of resistance bounce. So these candles are coming down. It went up further for some time, okay, and the moment it was about to touch the 200 SMA, it took a resistance there. Okay, the 200 SMA acted as a resistance to that particular candlestick, and then it bounced back in the downward direction. Okay, that this is what exactly is called as resistance bounce. Okay, so I believe you are clear on the concept of how do we trade the 200 SMA, guys. If you have any queries, please feel free to post it in the comment section. I will make sure that I go ahead and answer your questions. All right, so yeah, so that's it, guys. Hope you guys are now aware of the power of 200 simple moving average and can use it in your favor to make some handsome profits out there. Okay, also, as I mentioned it every time, do your homework on this before applying it on the live market. And actually there is a lot more to it that I'll be covering in my training program. So the guys who have joined in, I would request you to hold on to this. Okay, so and I would also request you all to like, subscribe, and stay tuned for my next video. And yeah, guys, just want to take 30 seconds of yours to remind you about my training program commencing on 22nd July 2017. And I'm getting tremendous response for the slot reservations. So request you all to book your slots right away, as it is on a first come, first service basis. Please visit www.HYILTTradings.com/trainings to get the details about the training program. Thanks much. And guys, these are the options which you have to get in touch with me or with my team directly. First one is the website. You can visit the website wherein you can register for the trainings directly, and we have also introduced a new page called Trade Gallery, wherein I post all the calls, the analysis of the calls that I give for the day, so you can have a look and you can very well understand why the call was given, what was the entry, and what's the exit. Second one is the Facebook page. You can visit the Facebook page, like it, comment on it, and you can also ask any queries that you might be having. Third one would be the WhatsApp number. This is the direct number for my team. So once you get in touch with us, we'll make sure that we revert back to you. And the last one is Telegram. You can join the Telegram channel to watch out all the calls that we give over there. So basically, Discord and Telegram will be in sync. All right. Thanks so much.